Hello everyone, how are you? Welcome back. I'm Dr. Labib. With reference to ACCA F8 Audit and Assurance, today we are going to have related to something with respect to mock exam. Okay, we will do one mock exam. This session will be for section A. Is that this section? This will be for section A, and the next video will be on the section B. Okay. It will take time for us to work out on the things. We will cover the concepts, applications, little bit reference to theory, and subsequently the related questions and answers as such based on scenarios. I kindly request you all to make sure that please subscribe to this channel, share this channel with the known people who are aspiring to become ACCAs, and for your convenience, press bell icon. So that whenever I'm going to post the new videos, you will get notifications for that. Okay, the purpose is only to reach out to the maximum extent number of people as such who are planning to write the things. You will have I'm going to cover F7 financial reporting, F8 audit and assurance, SBR strategic business reporting, and from next semester onward it will be financial management and advanced financial management. Fine, come back to this with respect to the things as such. You will have two sections, right? Section A and section B. Section B will have MCQs of 15 MCQs with scenario based questions, and these will be 3 questions. We'll cover section B at a later stage, next video. See, that the most important thing is you should understand it should compulsory, and it must be unattempted. This is the key word. We have to. There is no choice as such. Fine, there is no choice, and must be. There is no important questions. The concept has to be very clear with respect to ACCA. We need to cover each and every aspect as such. Fine, each and every aspect of the syllabus. We will not be 100% perfect, but we have to have a basic understanding. Then only things will be little bit easy. Fine, we will cover this. Now, I kindly request you again to subscribe to this channel and share this channel with the people. Now, coming back to this, what they are giving. This is the section A. Okay, this is with respect to what? Section A. All 15 questions are compulsory and must be attempted. You will have 3 different scenarios. Each scenario will have each subsection will have one scenario, and 5 questions will be there. Okay. Now, according to that, we have to make sure that how we can proceed. Regarding the section for the first scenario, you are an audit manager. It is an audit company. HOTS company is an audit company, and you are considering a number of ethical issues. By that time, you can understand that this question is related to basically ethics and governance. Okay, this is related to ethics and governance. Have arisen on some of the firms, old clients, long-standing clients. By the time you will understand this, you are reading the words. You should reactivate yourself with respect to the basic concepts of ethics and governance. It is which date? 1st July 2005. There are 3 clients are there. 1, 2, 3 companies there. Bush company is there, and plant company. Fine. There are 3 clients, and we have to work out on these 3 clients. It's not difficult. It's the way we are going to work it. HOTI company is planning its external audit. They are external auditors, not internal auditors. Yesterday, the audit engagement partner, Charlie Tower, discovered that a significant fee for information security purpose, non-audit services. Is that non-audit services, which were provided to 3 company by HOTI as company, is overdue. Charlie hopes to be able to resolve the dispute amicably and confirm that he will discuss the matter with the finance. Actually, the fees should should not be pending. Is it? Should not be pending, should not be overdue. Okay, should not be overdue at any cost. Fine. Percy Mars is the weekend. Percy Mars. Who is the Percy Mars? Percy Mars is the who is the Percy? We discussed the matter with the Percy Mars. Percy Mars is the finance director at the weekend, as both are attending a party to celebrate engagement of a Charlie's daughter and Percy's son. Find a Charlie's daughter and a Percy's son. You see, now, when we talk about the ethical issues, code of governance, where is that? The things, what they are talking in terms of the external audit, overdue and things, what are the five basic concept things that has been. They will say self-review, there will be a self-review, there will be a self-interest, there will be a self-interest, there will be advocacy, is it? There will be advocacy, there will be intimate familiarity, is it? There is familiarity, and there will be a intimidation. Fine, keep, yeah, you have to put it in on your fingers, okay? 1, 2, 3, 4, 5. Now we will cover this the moment we are going to next. Bush Hotty company, again he's an external auditor of Bush company, is it? And also provides other non-audit services to the company while performing the audit for the year 30th November. The engagement partner was taken ill, and an indefinite leave has been happened from the firm. It's very big question mark. At the peak time he became ill and he took indefinite leave. The ethics partner had identified the fault of potential refine. There are replacements. Brian Smith, who is also a partner in charge, we cannot. What services is he doing? He is doing tax services. Fine, tax services. Monty Nod is an engagement partner for 10 years. You cannot be, okay, for more than specified number of years. Dixon, who introduced Bush as a client when she joined the firm as an audit partner. For what we will see, who are the best replacements. Who is also a partner of changing what? Payroll services. Means one person is taking the tax services, self-review will be there. Payroll services, self-review will be there. Is that you will have familiarity, fine. Here we will have a self-review. Here you will have a self-review. Here you will have a self-review. Is it right? Here you have self-review, and here you have a familiarity. Here we have to check what is the things which is happening. Plant company. Plant is a large private company which financial year and has been audit client of Audit for several years. The moment we say it is for several years, what will happen? It is a concept of familiarity. One of the partners of Hotty, yes, is acted as a wine. That's good. Self-review. Is it right? ACCA for the last 2 decades. And at the recent meeting, he advised he can no longer be at the recent meeting, he is advised that he can no longer be ECR on the engagement, as is considering the appointment as a non-executive director, and he'll sit on the audit committee of the plant. Fine. No, that's the basic thing. Means he can have only one. He cannot have 2. He cannot be, okay. Then he has expressed his opinion that he will become a non-executive director. The board of directors asked Hotty company that he would be able to provide internal audit services. Fine, you can provide out. See, what are the things? If you provide, the fees should not be more than 15% of total fee. Okay, of total fee for 2 consecutive years. For 2 consecutive years. I am giving you all the inputs here in the beginning. What are the things we should come across while doing the while going through the questions as such. Fine. I kindly request you again, subscribe this channel and share this channel. That's very important. Fine. Now, wheat, another fourth one is a wheat company, is a listed company, is one of the largest clients. Last year, the fee is how much? 1.2 million and 1 point, which represents, see the thing, 16.6 and 18.1. Again, what is the threshold is how much? Threshold is 15%, not exceeding 15% for 2 consecutive years. Is that for 2 consecutive years? That's very, very important. Now you can see these are the easiest marks if you understand the concept as such. I am taking this mock exam from one of the study materials given. Is it right? It is. They have given this mock exam in their book. I am taking it from them. Okay. This is not mine. Which of the following statements correctly explain the possible threats or hardship with respect to independence and safeguard in relation to the audit of tree company? Yeah, what is the audit of tree company? You have the Charlie, is it right? You have that. Two people are there, Charlie and Percy. Is it right? They are overdue. Is the amount is overdue, and they say that we'll sort out this problem, but they are meeting at in the evening. They have meeting at the party. Okay, fine. They should not. Very clearly, the moment they are going to have a personal communication, no private communication, no private. It should only be a professional communication. An intimidation threat exists due to overdue. Fine, it is one of the reasons. Is that we say, there are 2 things we are going to say. One, we are talking in terms of independence, and one, we are talking in terms of safeguard. Is that one, we are talking about the independence, and the intimidation threat exists due to overdue fee. And that tree should advise that all must be paid before prior to the auditor report. No, we are not saying that we have to sign, but we should not delay. Okay, we are not going to say that it should be paid before it is signed. It should not be delayed. Not to be delayed. Is it right? Not to be delayed. What we are talking in terms of fees. A self-review threat exists due to nature of non-audit work. See, more than non-audit work, they have the personal private friendship is there. Okay, private gathering is there. A self-review threat exists due to nature of non-audit work performed, and engagement quality control review should be carried out. We are not talking about the self-review threat, okay? Because once he is working as which position he has taken? Engagement quality control reviewer, is right? Engagement quality control reviewer. That is also not there. Fine. A self-review exists due to relationship. This is very critical between Charlie and should be removed as a odd. We should not have a relationship between the. If that is the case, this is a threat. Okay, it is a threat. The answer is what? The answer is 3. Next. Taking into account the concern of an ethics partner. For ethics partner, what he said, ethics partner has advising the replacement. Is that what the replacement for the engagement partner? For the engagement partner. Identify the potential replacement. Should take over the audit of Bush company for the year ended. What are the things that has been given? See the thing. We have written here. Is that we have here what is there? We are talking in terms of self-review. We are talking about familiarity. We are talking about the self. Again here, we are doing payroll services, and automatically services. Self-interest will also be there. Okay. who introduced Bush Company when she joined the firm as an audit partner. He is only an audit partner, is it right? He has introduced what? She has introduced Dixon, is it? As a client when she joined as an audit partner. Means of all the options, this is the best option. Is it? This is the best option. That's why we are taking into consideration this. Next, which of the following options correctly identify the threats to Horty and Company independence and purpose of appropriate course of action if Allen Marshall accept appointment as a non. See, you have to be at one place. You cannot have in two places. Is right? There is no familiarity here. Is that he's working. The self-interest and familiarity. Familiarity is not there. He is working as a engagement control, quality control reviewer. Is right? Can continue as an appropriate safeguard. This is also not true. This is also not true. You have the self-interest and say yes. If you are working as engagement quality control reviewer, there will be a self-interest and you will have the self-review. Yeah. If you are doing this is a threat, and what is the course of action? If it is a threat, you have to resign. Must resign as an auditor. That's very simple. You have to take one action as such. Is that you have to take self-interest and familiarity. Is that again there is no familiarity. Fine. Familiarity only. What is the option? Option is option 2. That option is option 2 as such. You are separately considering planned company request to provide internal audit services and the remit of these services if they are accepted. Fine. Internal audit services. It is related to what? Internal audit. Which of the following would result in Horty Company assuming a management responsible in terms of internal audit? What the internal audit will do? Is it right? What the internal audit would do? Taking the responsible for designing and controlling internal system. Yes. Determining which recommendations should take priority and be implemented. Yes. Determine the reliance which can be placed on the work of an internal audit for no. We are not talking about the reliance. Is it? Reliance is with respect to whom? Reliance with respect to the experts. Is it? Reliance with respect to setting the scope of internal audit work to be carried out. Is that setting the scope of internal audit to be carried? The answer is what? The answer is this 1, 2, and 4. Which of the following actions should Horty Company take to maintain their objectivity level relation to the level of fee income? Fee income is one question will be there somewhere on the fee income. Okay, one question will be there somewhere in section A or in section B. So the level of fee income should be communicated. You see, whatever is there, if you are exceeding, if the client is exceeding 15%, then it has to be communicated to whom? It has to communicate with the people charged with governance. Separate teams should be no. We are not talking about the separate teams. Separate teams will happen when you are talking about the clients in the same industry. Is it right? Competitors. Is that when you are talking in terms of competitors, then in that case we are taking the separate teams used for a and not audit and non-audit work. Request payment of the current year in advance for any work being performed. Yeah, request. You cannot request. You can do, but you cannot say that pay in advance. You cannot say that I am taking $100 and you give 50 and you give 50. Then we can say that yes, it is not greater than 15%. It is what happened. We are talking in terms of total fees. Is that we are talking in terms of total fees. Request a pre-issuance review. You can do a review with a external order accountant with somebody else. Is that whether it is possible or not? Is that the answer is what the answer is we should not have separate teams. The answer is 1 and 4. Is that the answer is 1 and 4. This is the way they will give you a scenario based question, and based on the scenario we should we should be able to understand the concepts, and unless until you are theoretically strong, conceptually strong, we cannot go through these questions as such. We should have a comprehensive view. Fine. Now, what it says in second scenario, this is related to 6. Again, 5 questions will be there. There are 5 questions. MCQs will be 5 into 2. It comes to how many marks? 10 marks. Chester manufacture and sell pet toys to the wholesale market. It has prepared a financial statements 20th. That's when they are preparing on 20th Feb 2005. It is 1st July. Is it? When it is there, it is almost 1st July 2005. Okay, almost June, March, April, May, June. 4 months. Okay, 4 months. You are an audit assistant and with Durham and Company, and you have been assigned with current liabilities balances. You have calculated the payables payment period to be 66 days. Last year it was 45 days. And asked the directors to provide explanation why it has been increased. Number of days has been increased. Number of days has been increased. Simply we have not paid. One of the reasons is we have not paying on. We are taking more time to pay. Chester receive monthly statements from the suppliers and perform regular reconciliation. There were inconsistencies. When you are doing the reconciliations, the inconsistencies has been there in respect of the following. What are the inconsistencies? A balance as per purchase ledger, it is this much amount. As per supplier, it is this much amount. Fine. Now, for each company, they give something. Is there for Chester? What they say with respect to Oxford company, they have a credit arrangement with Oxford under which it received 14 days. It received 14 days. 14 days before the supplier raises invoice. It received goods 14 days before the supplier raises invoice. They will receive goods worth of 1,000 when they have received 18 February. Closing date is how much? They are finishing it when? They are finishing it on the 28th Feb. Is it right? 28th Feb 2005. 28th Feb 2005. Is it right? 28th Feb. When they are receiving 18th Feb. If you take 14 days also, is it? If you take 14, it will go to March. Is it right? If you take 14 days also, it will go to when they are receiving. They will receive somewhere, invoice will be received somewhere in March, okay? Somewhere in March 2005, after 15 days. Is that after 15 days, after 14 days, okay? After 14 days. For which the invoice was received shortly after the year end, that's why, in accordance with the agreement. Chester entered the transaction accounting records as per the date of invoice. As per the date of invoice, they have received after 14 days, and it is by the time it will be the next financial year, and they have entered as per the invoice. Second one, Pool company. The difference of this balance will be investigated. We have to know what is the balance. As per the question, we will do. Chester finance director has informed with respect to the third one that there was an error in closing the purchase ledger and was closed 3 days early. Invoices of 27, 26, 27, 28 were not posted. You have to post it. Is that then only what will happen? Then only it will be a completeness. The directors of Chester have confirmed that following discovery of error, a manual adjustment was made using the general book. Fine. Now, which of the following supply balance will increase the high risk in relation to completeness of the liability at the year end? Yeah. Which of the now which of the suppliers? Fine. How many suppliers are there? There are 3 suppliers. Fine. The following in the received from the main suppliers. Fine. Now, what a supplier with a high balance at the year end and the low volume of transactions. Is that what it says? it says that a supplier with a high balance at the year end and a low volume of transaction. We are talking about what? We are discussing something with respect to completeness. It has to be posted. Is it right? It has to be posted. Then only what? See, it has to be posted and indicate a high risk in relation to the completeness. Means you have to record. What happens? We have to record or post all transactions. Okay, all transactions. Then only we are talking in terms of completeness. Fine. A supplier with a high balance at the year end with a low volume of transactions during the year. Definitely low volume means they will not have they will enter it. This is all our understanding. Fine. A supplier with a low balance but with a high volume. You have high volume of transactions. Yeah, high volume of transactions. If happen, definitely what will happen? We cannot record it. Is that we cannot record it automatically? We cannot post it. Fine. Definitely there will be some question mark here. A supplier with a low balance with low volume. Volume is low, automatically it will be posted. See, when it will be delayed, then when the volume of transactions will be very, very high. A supplier with a high balance at the year end and high volume of transactions during the year. Is it? Here also what will we will not take that much cognizance of the things as such. Is it? The thing is that if it is a low balance at the year end with the high volume of transactions, there will be a concept of a high risk. Fine. Now, which of the following correctly explain why payables has been increased? See, payables are increasing only one case. Is that payables will increase when you will delay payment. Is that when you delay payment as such? Chester received a prompt payment discount and one of the suppliers was, when we receive a prompt from one of the suppliers for the first time, it will not happen. Chester obtained a trade discount from one of the suppliers which reduced the amount owed to that suppliers. But you have obtained a trade discount. Definitely the assumption is we will pay. Chester purchased unusually high level of goods in February and a large order has not paid for those goods. If it is not paid, what will happen? The number of payable days will be increased. Chester took advantage of extended credit. When they took advantage and offered by new supplier in respect of large order which has been fully settled. If you are doing that, then it will not. The answer is what? The answer is C. Which of the following is an appropriate action in respect of inconsistency of the overall balance with respect to Oxford? What is the Oxford company? Just we have to see what is the senior. They have a credit arrangement with Oxford under which it received 14 days before the supply raises invoice. They received how much? They received 18 February, and after the year end they received the invoice, and the accountant has entered the invoice as per the date of, means there is a concept of reconciliation. Is it? The auditor should take no further action. No, the auditor has to take action. Is it? As this is a timing difference. See, timing difference will be there. As they said, they received it on 18th and they have how many days they received it after 14 days. Is that invoice? The timing difference is there, but no further action. The auditor should request the purchase ledger balance is amended at the reporting date to reflect the reason. See, purchase, when we are talking in terms of when we are talking in terms of the concept as such, is that what is the amount? What is the amount that has been mentioned there? What is the difference? Difference is how much? Difference is Difference is how much? Take the difference. It comes to how much? 296 120 minus 151 480. It comes to how much? 144 640. Is it? And 144 640. This is the amount has been given here. Is it? 144 640. Now the auditor should request the purchase ledger. Is it? Purchase ledger. Accountant. Is it? Its purchase balance is amended to know as per the agreements. We should not make anything. Is that? The auditor should contact the supplier and request a supplier statement at the current date. That they are doing, is it right? The auditor should contact the supplier and request a supplier. See, there is a reconciliation is done, is right? A monthly reconciliation is happening. Because of the reconciliation only, this issue has been arised. The auditor should request an accrual is created. Accrual. In respect of the goods, we have received the goods on 18 Feb and it has been not yet invoiced. It has been invoiced after 14 days. This is the answer. Which of the following is a valid difference in respect of pool company? How much is the pool company? Pool company is this much. Is it? So how much is there? See, supply balance per statement 84 235. Is it 84 235? And how much invoice? Invoice has been paid twice. An invoice has been posted as a debit note. Debit note, fine, it's not accounted. An invoice has been received and processed prior to the receipt of goods. Is that invoice has been no? What has happened? How much is the balance as per 72 168? Is it right? 72 168 minus balance 72 168. Fine. 72 168 means they have paid twice. Is it? They have paid twice. In order to pay twice, we have to reduce it. Is it right? How much is the invoice has been paid twice? 156 403. How much you'll get? Plus 84 235 minus 156 403. 84 235 minus 156 403. 72 168. Means what is the mistake they have done? They have paid invoice twice. Okay? They have paid invoice. Which of the following would not provide a sufficient appropriate audit evidence over the completeness of the purchase ledger in terms of bath company? Take the things what is there in the bath company. Okay, bath company that there is a closing ledger is there. They have not taken 3 days entries, not posted. They say that is a discovery of this error and manual adjustment has been done in the general book. Fine. If you need a PDF copy, just let me know. I have given my email address. I will post you on my email address the PDF copy of this. Subscribe to this channel. Okay. Now, obtain a general book and confirm all invoices recording. From Bath, we are obtaining a general book. No, we cannot obtain a general book. We have to, if there is any completeness, the completeness has to be, we have to review it. Okay, this is the verb we have to use. Okay, review the accruals listing. Is that because we have not entered from where? We have not entered from 26 to 28 to ensure goods received from past post year end for the which invoice has not been received have been recorded in the correct period. We have not recorded in the correct period as such. For post-year-end cash book payments to Bath, date of matching the invoice. If we have not recorded, is it right? They have not recorded. This is the key word. Is that? This is the key word. We have not recorded. And this is also not. It is not working. Is it? This also we have to review. Review a sample of invoices from Bath recorded post year end and match the good received note if they have been recorded. See, they are saying that the invoice has not been received and been recorded in the correct period. Fine. In the correct period. The answer is what? The answer is this one. They have not recorded in the correct period as such. Fine. Now, what is the next one? Fine. Another three. This is the third section scenario 3. Voila is a manufacturer of shoes. You are an audit manager with sale. Please refer to my theoretical lectures which have been posted. That will give you the related theoretical lectures, which will give you a very deep understanding about the concepts. Anything is missing, please post it on the comment section. I will get back to you immediately. You are an audit manager with Silo, and you are performing an overall review of financial statement for the year ended 31st December. With respect to audit report, it is 1st July. Profit before tax is how much? 131. Very, very important. Fine. 131 million. As part of your overview, you have performed analytical procedures over the draft financial statements and noted in October 2, performed in October 2. You are aware that the credit controller of Voila left the company in 2004 and director has said that as a result, companies experience difficulties in debt collection. Credit controller has left, definitely. The credit controller has left. You are finding it very difficult in debt collection. Disclosure. During the year, Voila revalued head office as part of your review. You are considering the detail which is disclosed in property, plant, equipment note. In that direct, fine. Okay, no problem. Uncorrected. Your review was also includes an assessment of uncorrected misstatement. There has been recorded. What are the uncorrected? See, first you have to say 1942. 1942 divided by what is the profit? What is the profit? Profit is 134.4. 131.4. It comes to how much? It comes to 1.4%. Is it right? 9198 divided by, this is millions. Is it? This is thousands. Is it right? This is million, this is thousands. Fine. 131.4 million. It comes to how much? It comes to 7%. Fine. 8541 divided by 131.4 million. This is in thousands. Okay. It comes to how much? 6.5. It comes to how much? 2900 divided by 131.4. It comes to how much? 2.2. Is that? See, if it is sales, materiality will be 1%. If it is on profit before tax, materiality will be how much? 5% maximum. Is that? 5% maximum. Okay. Now, first, the moment you will come across this type of questions in the examination, basically you should not have a second thought. Okay, you should not have a second thought. Immediately you calculate it and you keep it ready. The adjustment for faulty goods. The adjustment for the faulty goods as an uncorrected statements above relates to the entire batch of shoes. Interest payable, additional allowances, error in sales invoices, write-off. Okay, faulty goods. Fine. These are the individual amounts, and this is the percentage. This is what important. Okay, we have to calculate this based on this. Definitely they will have one question on this, which were produced on December 12th, the audit work concluded that the cost of inventory exceeded its net realizable value. Cost of inventory is more than the net realizable value. By how much? 2.9. Okay. By how much? 2. The director disputed the audit team figures and believed that the realizable value of the inventory still exceeds its cost. I mean, there is a dispute of that. Fine. Now, what we have to do? Very simple. Materiality, the concept. Overall review. Overall review of your and financial state. Which of the following would form part of auditor's overall review of the state? Fine. Which of the establishing whether preconditions of the audit are present? Establishing whether the preconditions of audit are present. Assessing whether the information and explanation obtained during the audit is adequately reflected. What we are doing, we are talking about the basic concept of what we have said that it is where I have taken it is where is that? 1 minute. You are performing an overall audit report. Profit before tax is this much. Overall, you have analytical procedures, receivables, experience difficulties. You are considering the things, uncorrected statements. Fine. Okay, it exceeds the cost. Okay, that's good. Oh, okay. Now, what is which for the overall audit review? Okay, which of the following is the overall audit review? What you have to do as an overall audit review, overall of the auditors, what they have to assess the information and explanation, okay, during the audit are adequately reflected or disclosed. Is that whatever the information, and explanation should be adequately disclosed. Is that adequately disclosed? That's what that adequately reflected. Fine. Adequately disclosed. Yeah? Where establishing whether the precondition, this is at the time of acceptance. Is it right? At the time of acceptance, we have to take this, whether preconditions for the audit are present or not. Is it right? This is not a part of overall audit process. Is that this is not a part of overall audit process. Performing a detailed review of audit working papers. Is it? Performing a detailed review of audit working papers is part of it is a part of what? It is part of quality. It is part of quality control procedures. Is it? It is part of quality control procedures as such. It is not with respect to overall audit. Reviewing the adequacy of disclosures of accounting policy. This is the part of overall audit procedure. The answer is what? The answer is 2 and 4. See, for everything you have to write the explanation. It makes things very easy. Which of the following is a valid explanation for inconsistency between the analytical procedures on trade receivables and director's statement? There is a disagreement, is it right? There is a disagreement is there. What happened? Yeah, there is a disagreement. When there is a disagreement, what they say? It is a cost and net realizable value. Cost value is high, net realizable value is less. Is it right? Cost value is high, the net realizable value is less. A change in sales mix towards high valued product. Is that a change in sales mix towards high value product? We are talking in terms of overall, is it right? Is it? We are talking in terms of overall. Definitely. We will see this. Is that we will see this. A increase in the proportion of cash sales since 2004. Yeah? Increase in the, what is the actual issue? Cost of this inventory exceeds net realizable value by how much? 2.9. They say that NRV director, what they say, director dispute that the audit team figures and believe that the net realizable value of the inventory still exceeds, net realizable value will be still more than cost. Is right? This is the director's perspective. This is the director's perspective. And what is the as per the financial statement, cost is more than NRV. Now how we can come to a conclusion making it yeah? What happens? Net valid explanation, is that valid explanation of inconsistency? A change in sales mix towards the high value products. Yeah? A change in sales mix, sales combination towards the high value product. Fine. We are talking about what? We are not talking about the. We are talking about what? We are talking about the NRV. Is it? We are talking about the NRV. NRV directors think that NRV is increase in the proportion of cash sales since November 2004. When it has been happened, see the thing. When it has been happened, it happens in which has produced in December 2004. Is it December 2004? Fine. December. The problem is occurring from where? The problem is occurring from November 2004. Is that the moment the credit controller has been left? Is that the problem occurring since November 2004? Is that now the problem occurs from November 2004. Before November, see, this is the clue. Is it right? This is the clue, hint we can say. Is that it is not the thing. The problem occurred since 2004. An increase in the rate of sale tax sale tax. We are talking about the collection. Is that we are talking about the sales growth of 1% per month. We are not talking about this. Straight away, the answer is what? 2000. See, this is the way we have to now understand. Now, what is the next one? This is question number 13. Is that which of the following details should be disclosed in respect of the revaluation of head office if the auditor is conclude that disclosures, if the auditor is to cut disclosures are adequate? Is that right? Now, what? See, if you are making a revaluation, what are the things which we should take into consideration? We have to take effective date of revaluation. We are not concerned about the name of the valuer, is it? We are not the amount of revaluation increase, and we have to carry amount of head office under the cost model. We are not concerned about the name who is conducting. That is not related. 1, 3, and 4. Which of the uncorrected statements number 1, 2, 3 by the audit team must be adjusted for if the auditor is to issue an unmodified report? Is it? If the auditor has to issue an unmodified report, what are the misstatements? Yeah, come back to this misstatements. See the thing, these are the misstatements. Is it right? These are the misstatements. Fine. Uncorrected misstatements. Uncorrected misstatements. See, you have to make profit before interest and tax. Is it right? Profit before tax. How much? Threshold is 5%. Threshold is 5%. Means here which one you have to take? we have to take statement 2 and statement 3. Is it right? We have to take statement 2 and statement 3. Fine. We have to take statement 2 and statement 3 only as per the calculations. Fine. As per the calculation. All the adjustments required. That is the reason calculations are very important. Fine. That is the reasons. The moment you have to be very specific about this. Calculations are very important. I am putting it in a purple color. Is it right? It means I am putting it star mark also. Calculations are very important. Fine. Now, what is the next one we are taking into consideration? The thing is, all adjustments required by the auditors have been made to the financial statement, with the exception of adjustment 4 relating to the fall. Which of the following correctly describe the effect of this matter on auditor's report? So, how much is there? Which of the has been made to the, which all adjustments required to the by the auditors have been made to the financial, with the exception of 4 relating to. Which of the following correctly describe the effect? How much is there? It is, we have calculated how much? 2.2%. Is it right? And 2.2% is how much? Is it 2.2% we have calculated? Is it right? Go back. Calculations with respect to which one? Statement 2 is 2.4. Is it 2.9 divided by how much we got it? We got it how much? 2.2. Is it right? We got it how much? We got it 2.2. Good. Is it right? Again, I will write for your understanding. Okay, I will write for how you got it. It is 2.9 divided by 131.4. Is it right? It comes to how much? 2. Now, it is, when we take the things, it is less than 5%. Is it right? Less than profit before tax. Is it right? Especially with respect to profit before tax. Now, what is the? Is that we have to change, modify. We have to unmodified. Is it right? We have to unmodified opinion with no further disclosure. Unmodified opinion with emphasis on matter paragraph. It is immaterial. Fine. First thing is, it is immaterial. And would not require further disclosure. All are just, no material misstatement exists, and unmodified opinion can be. We can issue unmodified. We don't need, is it right? Because it is less than 5%. We cannot give qualified opinion. If it is more than the threshold. If we more than the threshold and we are directors are not modifying the opinion, then we have to think about qualified opinion due to inability to get sufficient. It is also not there. The answer is what? The answer is this. Okay? The answer is no unmodified opinion with no further disclosure. Fine. This is the section A of the mock exam. Fine. This is the section A of the mock exam. You have 3 scenarios, and based on the 3 scenarios, you are getting the 15 questions, and you have to work it out. And that, make it sure that be very specific on that. And anything is there, please mention it in the comment section. Any doubts? Maybe I'm little bit fast. I'm little bit not clear. Anything? Just let me know. And subsequently subscribe to this channel and see till the end. That's where it's very important. The moment you are seeing till the end, you will have a complete. Next, I'm coming up with section B regarding the. Thank you so much. Best of luck.